New York, Ms. Velazquez is now recognized.
Thank you, thank you, Mr. Chairman. And Comptroller Lander, it's always great to see you, especially here in Washington. While the other side continues to rail that corporate disclosures and shareholder input on subjects like corporate diversity, executive pay, climate, and political donations are woke ideas that have no connection to a company's bottom line, they fail to recognize these subjects are about investment and market risk. As head of the New York City Pension Fund, one of the largest in the country, don't you want all relevant data and information about an investment?
Absolutely. There is simply no simple line for an investor in thinking about what the risks are at a particular company. You worry about reputational issues. You worry about leadership and will it change. You worry about, is the broader regulatory structure in the industry going to shift? There's no neat line. That's what it means to be an investor. All investors are trying to get all the information we can, assess that range of risks. And yes, of course, some of them are shifts in the economy or the economic sector, but they're legal, they're operational, they're environmental, they're workforce. What these proposals do is bring more information and transparency so we can evaluate those risks effectively.
In fact, isn't it your duty as a fiduciary to our city's pensioners to consider all material data, risks, and opportunities relevant to a portfolio?
Absolutely, and I'm lucky to have a great team of people to help assess those risks who say, here's what we need to know from a company. And sometimes they'll tell us directly and we can do it through engagement. Often we file a proposal and then the company works with us, as I mentioned for JP Morgan Chase. Sometimes we bring a resolution and that helps provide that transparency.
And as a fiduciary, isn't it true that your main responsibility is to secure the strongest risk-adjusted return for your beneficiaries?
My fiduciary duty is to secure the strongest risk-adjusted returns for my beneficiaries, who again are teachers and nurses and school crossing guards. Risk-adjusted is what's key there. What an investor is doing all the time is assessing risks. How can you do that without the full panoply of information?
Thank you for that answer. Comptroller Lander, you lead our city's pension fund. The New York City Pension Fund has filed resolutions for decades on issues associated with climate change, diversity, human rights, and political spending. As head of our city's pension fund, what is your philosophy that leads you and the pension fund to use the resolution approach? And do you believe it is consistent with your fiduciary's duty as Chief Financial Officer?
So we always start from fiduciary duty to achieve maximum risk-adjusted returns for our beneficiaries. And again, when you wake up every day responsible for the retirement of the hardworking people who make our city run, it's easy to keep that in mind. I gave some examples in my testimony. If we think a company's got insider trading risks, that's the thing we're going to look at. With corporate board diversity, it has been proven through independent research that Bloomberg and others have done that having a more diverse board helps you see the broad issues facing your economic sector better and improves financial returns. The same is true for proxy access to nominate directors. That's what we evaluate. All of the effort to bring shareholder proposals to evaluate risks are done to improve that risk-adjusted return.
And have you found companies to be responsive to these engagements?
Most of our proposals are resolved through engagement. I gave the example of JP Morgan Chase, no small company, who last year agreed after we filed a resolution with them seeking disclosure of their ratio of their fossil fuel financing to clean energy financing. They engaged with us and they agreed to start providing that disclosure. We then withdrew the proposal. It didn't have to go to the ballot. All investors have that information.
So based on your experience so far, why do you think my colleagues on the other side of the aisle and their allies in the MAGA movement are focused on limiting shareholder input?
I really don't understand it. Once upon a time, Republicans were defenders of free markets, and this is an effort to erode them and give more power to corporate CEOs at the cost of small shareholders.
Thank you. I yield back.